What's up, y'all? Welcome back to the Conscious Kitchen podcast, where we cook up conscious conversation. Money, money, money. It's on everyone's mind. Summer's almost over. We enjoyed ourselves, maybe took a vacation and bought way too many cocktails that we could actually afford. But treat yourself. But can self-care also look like investing? Julie Alma Tavera, also known as Investing Latina, is changing that narrative for her community. Her story is truly unique. She tells money stories from the lens of a Dominican Republic-born immigrant living in New York that went from being a shopaholic to a smart spender and diligent investor. Her money philosophies have inspired thousands of women to live minimally and spend intentionally so that they can invest more. Not only is she an award-winning by a personal finance advisor, she writes for publications like CNBC, Times Next Advisor, and the HuffPost. Julie is a sought-after Fortune 20 speaker and a facilitator who has led workshops at Nasdaq, Google, Verizon, and the White House Economic Council in 2021. What we love about her most is her authentic stories of struggle, her clear, concise messaging on her socials, and her care for being of service to others, and making investing look fun and super easy. Thank you, Investing Latina, for being part of the Conscious Kitchen podcast today, where we love money, and in hopes you can inspire us today to save more and make our money work for us. Welcome.
Thank you so much. I'm so happy to be here and to talk about money. So important.
so important, right? It's like so many of us we're shopaholics, and now we're like, all right, what do we do with this money that we've been saving in the bank and not shopping with? So we're excited to learn from you today.
Yeah,
you share so many great resources on Instagram, so we're just going to tap into the reality of some of those resources.
Yeah, how are you doing today? How are you feeling?
I'm doing good. Yeah, I'm kind of adapting to this like new life. I mean, everything is not fully opened, but things are kind of opening up, and there are a lot of shifts when it comes to money management, because last year we really were locked down. If you were spending, you were pretty much just shopping online. But now this year that the world has kind of opened up in certain ways, we're spending more, right? So there's changes, and changes are definitely good, especially when we're talking about adjusting budgets and setting new goals. It has to be known that those things will happen, and it's best to kind of prepare for those things, know that they're going to happen, but also know that life is also unpredictable. Okay, so we have to kind of roll with the punches to some extent.
Yes.
But if we set those goals, we're kind of putting ourselves in the best place possible to manage those unexpected things.
Right. Because, the pandemic just threw a wrench in our life, and just, we're kind of in this like pendulum, is that how you pronounce it? Of just like, feeling really safe and unsafe with, finances, to job security, to, so much unpredictability. So I know today you can give us really some gems on just like really some of just the fundamental main principles of investing and saving money, just like for the millennials like us, and just some straightforward tips. So we love that.
Yeah, we're excited to dive in with you. So Julie, tell us what's like your story on financial literacy, and how did that understanding fuel your passion for investing?
Yeah, so my story on financial literacy is that one of my first money memories was getting a credit card from my dad when I was 12 years old. And it sounds like fancy and all, but the truth about it was that my dad and my parents, and I myself, I'm an immigrant here in this country, and my parents struggled a lot with just navigating the space and figuring out how to get work, and to some extent, like my dad, the reason why he is kind of or was led to do what he does now is because he couldn't get work here. He actually had a degree from the Dominican Republic, but it was in a sense worthless here. And so when he finally started to get these things together and started to open up his bank account and have get a credit card, the first thing he did was give me one. And he's like, this is for you to use, but only use it for emergencies. And that was already kind of like my first money lesson in life when it came to credit cards, right? He's like, you only use it if you really need it, and call me before you use it, right? And so I had my little credit card in my wallet for a very long time, and I was just it always honestly gave me this little bit of confidence that I was protected, right? And I said, okay, if something were to happen, and I need money, I can always use my credit card that dad gave me. And so that stuck with me for a little while until I started earning money. And then when I didn't have to kind of worry about, oh, my dad said it's only for an emergency.
Mm.
That was the only time that I could use it. I started earning money. I got my own credit cards, and guess what I did? I started spending and spending. And I actually come from the fashion industry. I've been in the fashion industry for 16 years. A lot of people don't know that because I don't talk about it in Investing Latina, but I've been in that industry since I was 13 years old when I started at the High School of Fashion. And
Oh,
so
wow.
fashion for me has always been a huge passion. I love it. It really excites me. And when I started earning money, it was about, okay, the things that I love, how do I, get them, acquire them? And that's when I started with the shopping. And at first, I think it was kind of you kind of stick to your budget. I was working at the mall. I was only making, I don't know, maybe $100 a week. Who knows? At that point, I was making my hourly wage. I think was like 6.75, something like that. So I was probably only making like $40 a week. But I essentially, kind of stuck to my budget in a certain way. But when I started going up that income escalator, lifestyle inflation was just like, oh, you're making more money. So I
Mm-hmm.
graduated from college. And even when I graduated from college, I got my first big job, and I made the most money that I had ever made before. And I said, okay, I have to look the part.
Mm.
Looking the part cost
Yeah.
me a
Keeping
lot
up with the
of money.
Joneses. Mm-hmm.
That lifestyle inflation and keeping up with the Joneses and wanting to impress in a new job and in a new field, it really led me to buying a lot of Chanel bags and a lot of Louboutins. And it's just so funny thinking back on it because although they did, because I love fashion, they made me happy. Those were fun things for me, but it was just a matter of not really understanding kind of the true value of them and
Yeah.
how much you can get out of items. And when eventually when I learned how you can essentially make the most out of things and out of your money and split it up in ways that makes the most sense, that's the only time when you really start to see, okay, this stuff that I spend on, am I going to get a lot of use out of it? Is it worth it? Versus, oh, let me just buy what the newest thing, the biggest trend, whatever it is. And
Mm-hmm.
so I got into a lot of debt. So to cut my story a little bit short,
Yeah.
I got into a lot of debt, and I had a little bit of a wake up moment because my dad got sick, and my dad, he got diagnosed with cancer, and it was really, really shocking for all of us. And I thought, whoa, at that point, I no longer had his credit card, his account, but I still felt like my parents were my safety net in a lot of ways,
Mm.
because I said, I have my parents, they're not rich by any means, by the way. They're just hardworking immigrants. And I thought at that moment, if something were to happen, I'm royally screwed.
Yeah.
And I had all this debt. My father was sick. If he were to pass away, I would have to take care of my family. And so those things really changed my perspective. And I said, okay, I got to get rid of all this debt. And I started to do that. And it was a really hard time. I still get kind of emotional about it, thinking about all the reasons why. Um, but I felt like I really wanted to do that to sort of make my parents proud.
And what's beautiful. Yeah. Take your time.
Sorry, y'all. um, I didn't think I was gonna cry about this today, but
No, it's all good.
money is also very, very emotional, and it's the reason why
Hell
a
yeah.
lot of people struggle with it,
Mm-hmm.
Yes. I, for one,
Um,
struggle with it. So that's why I was like, we definitely need to have you on the podcast. And thank you so much for being so vulnerable because,
Yeah.
our space allows the rawness and just the realness of what's really happening with us young women in our generation with money and keeping up with these trends and then encapsulating like debt, You know, it's like, it's extremely hard. It's something we struggle with in different generations and different age groups, like in our 20s and then our 30s. And, you know, so it's like, it's all types of ranges of when we could be stressed or have anxiety around money.
Yeah. And then just the fact that we're second generation, you know, second generation Filipinos, so second generation like Latinos, it's like we feel this need to really take care of our parents, and like that's what we really want to do. And so, and it's so emotional. And how do you take care of your parents? It's always like money is the first thing that comes to mind. So I totally agree with you that money is a very emotional just part of our lives.
Yeah, and so finally, when I realized what it was that I wanted, and when I sort of aligned with what my goals were in life, I decided that there was no need to spend excessively on all these things. And I had so much stuff. I spent a full year not buying a single item while I was getting out of debt. And I
Amazing.
still had things that had tags on. It was crazy. It was
Yeah.
insane.
Yeah.
And so, and just that experience, you know, you kind of have to go through things in life in order to learn lessons. And just thinking about that experience, I think back and I'm like, okay, you know, it put things into perspective for me. And there was also some like a silver lining in all of it, because when I started a job, even while I was in college at a nonprofit organization, I actually started investing. And the reason why I started investing was because I signed up for the company retirement plan. And I had
Mm-hmm.
no idea what it was about or what it meant, but I signed up. And that, when I was kind of fixing my finances and trying to get out of debt, kept looking back at that. I kept referencing that account because that was the account where I had, you know, I had 5 figures in that account. And I was like, okay, I know I have all of this debt, but
Wow.
I still have money in this account. I put money, you know, I've stacked money away,
Yeah.
not even noticing. And that's the cool thing about these accounts, especially when you automate your finances, which is, you know, write that down, automate your finances, automate your savings, automate your investing, because it happens without you even noticing. You do what you can. At the time, I was only doing like $50 a month. It was something small when I first started. And then I kept building that up. And nowadays I invest, you know, on the low end, I invest probably like $3,000 a month now. So it's always
Wow.
about working your way up and using those positive accounts as inspiration. You use those accounts and you think, okay, you know, yes, I might have student loan debt. Yes, yeah, I might have some credit card debt. I'm working on those and have a plan for them. And then look at your positive accounts and think, okay, my goal is to grow those, you know?
It's
And
amazing.
that's kind of how I went through it. It took me about 2 years to pay off all the debt that I had. I stopped hanging out with friends. Like, people thought like I was like I betrayed them. They're like, you don't want to hang out anymore. And it's not really that. It's like, you know, I have a goal, and this is what I'm trying to accomplish. So it gave me a lot of opportunity to focus inward on my work that I was doing at the time and myself. And when I became debt free, oh my God, the feeling is like, you can't even describe it. When you don't have
Mm-hmm.
credit card debt, when you don't have this thing hanging over your head every month, this payment that you have to make, you know, that honestly is mostly interest, you feel like a different person. And so after that, I quit my job.
Yes.
And I did a lot. I changed my life completely. I said, you know, I don't want to be in the corporate world anymore. I want to work for myself. I didn't, you know, and I did that. And then a little bit after that, I started Investing Latina, because I said, you know, I wish I could have learned a lot about these things earlier on. I kind of got lucky that I fell into investing in a sense. Right place, right time. It just
Yeah.
happened. But if I would have known the power of compounding interest, I would have been investing hundreds of dollars earlier on.
From
And
when you
that's what
were
I do.
from your first job at the mall, right? You would have been
Right.
like, I know. I always
I'm like,
regret
I
like,
need that money.
what did you do
Yeah.
with it? Like, I'm always like, what the hell did I do with that money? Like, where is it? I don't know where it is. It's like it
Yeah.
disappeared essentially, right?
Oh, so I mean, speaking of which, I mean, you know, you're speaking about the first, when you first start investing. What are some common mistakes that people make when they first start investing?
Mm-hmm.
I think the common mistakes around investing investing, not when they start. The most common mistake around investing is feeling that you need to know everything in order to get started.
Mm.
Truth is, you don't. Like I said, I did not know anything, and I started investing. It was in a target date fund, and some people might not. If you don't know what that is, I'll explain it real quick. A target date fund is one of the easiest ways for you to start investing, like right now. Like as you're listening to this podcast, you could literally go to Vanguard.com, Fidelity.com, eTrade.com, one of those brokers, and open up an account. There are different types of accounts, so you can always do a little bit more research to understand which type of account you want to use. But honestly, it almost doesn't matter which one you use because your only point is to get started. And a lot of people have that fear. They're like, I don't understand enough, so I can't get started. You go to one of those websites, you open up the account, and you buy a target date fund. And that target date fund is essentially a basket that has a bunch of stocks, a bunch of securities, all sorts of instruments, and they are designed to invest for you up until the day that you're going to retire. And so target date is the date that you're going to retire. So that could be when you're 65. That's the retirement age. Or you can choose a fund that has a different time if you want to retire at a different time. But you ideally want to set it up to be for your official retirement date, because that fund is going to invest heavily in stocks until you get closer to taking the money out. So as you get closer to retirement, it invests less and less in stocks and more in safer instruments like treasury bonds and cash-like equivalents, the things that are going to be less risky. So that's what it's designed to do. And that's how I started. And that's how you can start today. Target date fund, you don't even have to think about it, which whichever broker you choose to use, all of them offer target date funds. The only thing is that you won't get those options with apps. So a lot of them don't have those kind of things. So you want to use a broker that's pretty established, like the ones that I mentioned, that will already have those investments designed for you.
Okay. And so I think a lot of people don't get involved right in investing because like it feels like it's going to take so long to make money. Like what can we try that it's like a quick make money, that it's like it makes you more excited to invest? Like what's like a quick way that we could see like rewards pretty quickly?
So the exciting parts of investing are when the market is up, and the market is up right now. What we call, a bull market. The market has been on high speed, all-time highs for a very, very long time, for about 6 years now, actually. And and the pandemic, we took a dip and everybody sort of panicked, but the market keeps going up. So it makes it really exciting. Honestly, no matter what you buy right now, you're not gonna lose. However, when the market starts to correct itself and it starts to shift and go down, which it does, it will, it's just the way that it functions, you're going to see losses. So you have to really understand going into it. If your goal is to make a quick buck, you should know exactly what you want to buy and why, and when you're going to get out of it. Because if you do know those two things, and I'm going to use an example like Tesla. If you decide that you want to invest in Tesla, they're doing great, they're innovating, their stock keeps rising. They had a stock split last year and or earlier this year actually, and they still continue to rise. They're one of the biggest players right now. And you can say, okay, I want to buy Tesla. It's at $600 right now, more or less. I'm going to get out of it as soon as it hits $900. That $900 may come. You have to also understand, and the way the trajectory that we can see with the stock, it's very possible that it could come. But the problem is that when people get to that point, they don't pull their money out and they don't sell, and they're like, okay, no, I'll wait. So it becomes like gambling. So that's the thing when we say when we think about, oh, what's a quick win that we could take? And there are very smart ways for you to go about this. You just have to really do research. It's not to say that you can't make money quickly in the stock market. However, that should not be the majority of your portfolio.
Right.
That should be a small part of it.
Yeah, that's a good point. So for example, like, betting on like more higher risk stocks for something that will be better of like a compound interest, would you suggest something more like index funds?
Yes, and that's exactly what I teach actually. When I started Investing Latina, I just started sharing what I do. Now I teach people how to get started with index funds because it is one of, aside from target date funds, it's one of another easy way to invest. And it involves very, very little risk because what you're doing, instead of investing just in Tesla, you're investing into Tesla, Microsoft, Apple, all of the Johnson and Johnson, all of the biggest companies in all sectors. There are 11 sectors of the market. They're all in that fund. And same thing applies with the target date funds that I mentioned earlier. Index funds, same thing. It could be the total market. An index fund can be the total market, so a basket of all those stocks in the market, or it can be a sector of the market, a basket of technology companies, a basket of healthcare companies. So you kind of have to decipher what your goals are and what you're trying to get to. But with index funds, you're just following the market.
Got it. And so from starting like to invest, like at an early age or even starting at later age, like if you just, have a chunk of money, some people are receiving like even unemployment right now. It's like even using some of that money to invest, I think that's a smart decision. How much money do you think we need to start a portfolio?
I'm actually, I get asked this question a lot because people always think I don't have enough. And that's kind of one of the other things. Like people don't get started and then they also think that they don't have enough. You can start with $10. Like you can start with $1. When
Hmm.
you open up an investment account, there is no minimum on how much you can put into that account. Once the money is in there and you set up your automation, okay, I only have $1. Let me put $1 a day, or let me put $1 a week, whatever that might be. When you get to $10, you can buy one of those index funds. They're about $10. There's some that are, $100. There are ETFs that are in the $300, $400 range that also kind of do the same job. But it doesn't take a lot to get started. You could start very, very minimally and still be successful.
Okay, awesome. So you guys are listening. Don't be scared to invest. $5, $20, a dollar if you need to. Just start. And you listed some really cool platforms, like as you mentioned.
The ones that I mentioned were Fidelity,
Deli.
Vanguard, E-Trade. Those are all what we call discount brokers. So you'll get a lot of power because they have thousands of employees and they've been doing it for about
Mm.
80 years. A
Yeah.
lot of all the three that I mentioned, they've been doing it for so long. That's always what I recommend. If you want to use an app, that's also okay. There's also apps where you can automate your investments, like there's Acorns, where you invest the change. I think Ashton Kutcher made it really famous, and he's an investor in that company. So you can use one like that. If you wanted to use Robinhood, that's another one that really literally gives you just access to the market, and that's fine too. It's just understanding what type of broker am I using, first of all, and what type of account do I have, because the type of account that you have matters a lot. It will affect how much in taxes you pay every year.
Got
So
it.
that's something that you have to kind of keep in mind as you learn.
Yeah,
Okay.
I think that's kind of like the scary part, right? That it's like, oh, my taxes change, then I got to do more stuff for my taxes. Like, what kind of things change for your taxes when you start doing investing?
Yes, and yeah, people are always very afraid about taxes, and I hope our system in our lifetime changes because our system is very complex. And maybe it's designed that way, who knows, right? But it is complex and it changes every year. New laws are implemented. Tax codes are adjusted. We had a lot of changes last year because of the pandemic, so there's always going to be adjustments. However, the if you think of the book, the IRS book, the book that says this is how much taxes you have to pay, it's a huge textbook, right? You can flip through and just figure out what are the things that apply to you. and understanding what are the things that apply to you. You have to have your things in order. I work a 9 to 5 and then I get a W-2, or I work independently and I get a 1099. I'm self-employed. I make this much a year. I spend this much on my small business, whatever it is that I do. As long as you can make a list and organize your personal finances, you can use that list and reference that IRS textbook and say, okay, because I do these things, what are the things that I should be reading in this book, and how can I learn a little bit more every year? Because you're not going to learn it all in one year. It's impossible.
Right.
You have to learn as you go. As your situation changes, you make adjustments. And ideally, we we want to at least understand as much as possible. Many of us outsource our taxes, getting our taxes done, getting our taxes filed. That's fine, and I think it works for most people, because a lot of people don't have the time or energy to do it. But when you're signing off on those taxes, you should take at least a day to read it all and understand what they put on that piece of paper. Because, and this is something that's really important, especially for our community, for the Latin community and minority communities, or non-English speaking communities, because of course a lot of these things are in English and not translated. So you have to kind of figure it out. You should be reading this, because no one is responsible for the money that you owe to the IRS more than you are. So you have to be careful when you outsource. You have to be careful when you get things done by a preparer. You want to make sure it's accurate. And if you don't understand something, you want to ask those questions before you sign off on that. You don't want to get a tax bill in a couple of years because somebody filed your taxes incorrectly, and they filled in the wrong things. So at least reading it. And if you're listening to this podcast and you really want to learn a little bit more about taxes, just open up your tax returns from the previous year that you might have gotten done by someone. Open them up, read them, take notes, so that next year you can get a little bit more savvy with the things that you're going to put on next year's return.
Yes, for sure.
Yeah, great tips.
Yeah, great tips. And so let's kind of move into just cryptocurrencies and what's going on in like 2021/beyond, right? Because who knows how long cryptocurrency will be around. So this year it's really blowing up. And by what I mean by that is just that it's in the news and everyone's talking about it, because it's been blowing up for a while now, but it's like with everyone's new eyes looking at it, it's really just all over the place. What's the deal with it? What can you help us like understand the complexities of crypto and why it's so popular, and also why it's controversial?
Crypto is about 12 years old. So if you think about crypto, you can kind of think of it as a preteen, a teenager, right? So crypto, it's really exciting right now. It is all over the news. And the reason why it is so important and so groundbreaking is because it completely rejects our classic financial system. That's why crypto is a thing. That's why crypto has evolved to be such a huge platform. And I want people to really understand that the crypto is not the stock market. I know we can use the word investing for everything. Like, I invest into a lot of different things, but what is it that you're investing in and where is it that you're investing in is really important to understand. Crypto is not the stock market. Crypto is a completely separate and completely different market.
Yes.
When you think about the stock market, you could think about these companies that are publicly traded on the stock market that are ran by people. When we think about cryptography, which is what this is, this other market, we're talking about calculation. And cryptography is literally ongoing calculations and ongoing math that create new altcoins. And it is a little bit complex, but the most important thing that you have to know is that it's very separate, it's very different, and it is an opportunity for people to invest, but it's just another investment. And with any investment, you have to do enough research, you have to understand it enough. And my point about the fact that it's completely different from the traditional system that we have is that we use dollars here in the US. I'm from the Dominican Republic. There we use pesos. In China, we use yens. So every country has a different way of payment. And what crypto does, it actually eliminates all of that and says, if you have a Bitcoin, you can go anywhere in this world. I was going to say universe. And I'm like, I wonder if there's an alternate universe where they're already using crypto as a regular form of payment. Anyway, you can use a Bitcoin as a form of payment anywhere. So it's decentralized.
Exactly.
Our money, when we use dollars, pesos, and yens, is centralized and attached to the government.
Mm-hmm.
Crypto is the complete opposite of that. No one manages it. No one, decides, well, the peso is going to be worth 60, the dollar is going to be 60 pesos today, and that's what our governments do right now.
That's true.
And people love that.
Yeah.
So that's why people are like, forget the old system. We want the new system. And that's why billions and billions of dollars are now being invested and moved into crypto.
Julie had a question. So for example, investing would be like a investment portfolio, and then crypto would be, but based on all the different cryptocurrencies and, like Ethereum and all these things, would that be a crypto wallet, right?
Yes.
Yeah.
And I'm so glad that you brought that up, because that's exactly a differentiator. Like when you're investing in the stock market, you're using your current payment. For us, it's dollars. Anywhere in the world, it's whatever their payment is. That with crypto, you are using, and we're using a bank. So these are all banks. With crypto, you're using technology, and the wallet doesn't hold any dollars. It just holds all of these calculations that tell you, and the coding. So it's all purely technology, this coding that tells you that you actually are the owner of this amount of Bitcoin, this amount of Ethereum, this amount of Dogecoin, whatever it is whatever type of coin that you're holding is held in that wallet. So it's just a digital wallet.
Yeah. So as a pro, where is it majority of your investments? Is it like, let's say 80% of your US dollars are in your portfolio, or like every month contribution, and like 30% into crypto? What's your personal portfolio looking like?
My personal portfolio, percentage wise, it's at this point, maybe it could be probably close to 10% on crypto at this point, because I've been investing in crypto for a while now, and I invest consistently. Like I said, I automate. Automation is like, it's heaven. It's key. You don't even have to think about it. As long as you decide, this is how much I have available to invest in this particular thing. And that could be stock, that could be real estate, that could be crypto, whatever it is that you want, your business, whatever it is that you want to invest in, allocate a certain amount, automate it to create those different accounts so that you can automate them, and then keep doing it. So my accounts have been automated. There are times where I buy more, depending on my cash flow. So for me, it's probably around 10% right now. That is not financial advice at all.
Yeah.
And I want everybody listening to this, be very careful. You are and I said this earlier regarding the IRS, but no one cares about your money more than you. There are a lot of amazing people out here educating on personal finance, on investing. There are a lot of awesome people that know a lot more than we know. And that's what we do when we seek education. We search for those people. Do not take those things as investment advice. Take them as information that you can then go back, sit down with your own thoughts, your own ideas, your own goals, and come up with your own plan. So I shared that what my portfolio kind of looks like right now. I'll share a tip on how you should think about yours. My suggestion on how you should think about yours. You can take on risk depending on how comfortable you feel with risk. There are teenagers that might have all of their money in crypto, and all of their money maybe is like $2,000. So that means that 100% of their money is in crypto, right? But they have a lot of time to take on that risk. So depending how old you are, depending how comfortable with risk you are, those are the things that you have to think about. Right now, I'm 32 years old. I feel comfortable taking risks because I have a long way to retirement. I still plan on working for many years. I feel comfortable with risk, but that doesn't mean I'm going to put all my money on a very high risk investment. I'm going to allocate accordingly. I'm going to balance it out. So think about that. If you want to make money quickly, you can try to do that. But timing the market is probably not the best way for you to do that. If you really want rather just make money quickly, you're better off starting a business and figuring out a way to spend little money and make a lot from it from starting a business. I don't recommend the stock market for those quick type of wins, although again, it's still possible, but you have to know, you have to understand, and you have to read that information and how the stocks are doing in order to be able to time, and even then the majority of people can't get it right, but
Got
you
it.
have to definitely kind of think about it all and assess what are the things that, how much risk am I comfortable taking, what are the 3 investments that I want to focus on. Make life easy for yourself. Don't try to invest in 10,000 things. If you're going to invest in crypto, don't try to invest in like all of them, 1,000 different coins. Like, try to stay focused.
Got it.
If you find focus in your financial journey, you're going to get much further.
Love that. I love in most of like your conversations, you reflect on, sitting with educating yourself, taking that knowledge back. What is like the average time a month in like for women or for millennials or anyone listening, what's the average amount of time we should be investing and like taking the time to learn about financial education?
That's such a great question. I love that question because I think it's all about what your goals kind of are. And for me, because I am a financial educator, I spent a lot of time reading and I spent a lot of time educating myself and figuring out ways that I can teach this to other people. However, if you are in a place where you want to just dedicate 5 minutes, 10 minutes a month to just check out your portfolio and look up one of your investments and dig into that company, that's all you got to do. So it doesn't have to be something completely stressful. It can be or something that you have to put a lot of pressure on yourself to do. As long as you're already in the market, as long as you're already investing, as long as you already know how much you're going to invest per month, take your time and space it out, but always do it. Put a little reminder on your calendar, like, okay, check out my investment portfolio for 20 minutes, whatever it might be, and dig deep into it. I think when you're in the beginning of a journey and you don't have your whole plan laid out, you should probably be dedicating a good hour a week
Yeah.
to educating
Yeah, it's
yourself.
really helpful.
At least
Mm-hmm.
1 hour a week, and that's not asking for a lot. We all have jobs, we all have things that we need to do.
Mm-hmm.
1 hour a week isn't too bad considering how many we have in a week. You just have to carve out the time, right?
Yeah.
So at the beginning, when you're really trying to just figure stuff out, spend at least an hour a week, 4 hours a month reading and setting up your plan. Don't, and I'm not saying like go and fall into a rabbit hole and read forever and never make decisions. No, say, okay, this week I'm going to focus on learning about this so that I can make this decision. Which account am I going to open? Next week, I'm going to focus on which investment am I going to use and put in your first $10. The week after that, you're going to decide, okay, how does this fit in my overall portfolio? Should I start investing into something else, or can I continue doing this? And can I do more than $10? And how often am I going to do those $10? So you got to kind of lay it out like that and figure out your foundation, your process, and then it's smooth sailing from there.
Yeah.
How do you manage how do you balance it? Because like I'm the type of person that like if I do anything, I become obsessed with it and I like have to check it every day. And so that's like not healthy, So do you have feelings like that where it's like you have to be on reading things and kind of on there doing things every day. But how do you find that balance to kind of like check out and give yourself that space where you're not stressed?
I think it's so wonderful when we become obsessed with things and we dig into them and learn. Like I become like a binge podcast listener. Like, I'm gonna listen to all of your episodes all at once. I love
Yeah.
doing that. I think it's so cool. But you don't associate that with your plan. It's okay for you to read about it, learn about it, dig into it, become obsessed with it, but that needs to be completely disassociated with what your financial real life numbers are about. So set and if you feel that way, if you feel like your brain is scattered and you're not sure, or you're digging too deep into something, maybe you're getting to the place where you're over leveraging yourself and you're investing too much in a specific investment. You recognize, I'm glad that you recognize that, first of all, because you should recognize that, and then you should step back, and then you should say, okay, let me give myself a breather, let me chill out. And it also is an indicator that you don't have your financial plan set in place. You need to solidify that. And although that can change, that shouldn't be changing every single day. That should be changing maybe once a year, every 2 years. You can shift your plan, but your plan should not be shifting every single day.
Got it. Perfect tips.
Yeah. And so your financial plan, meaning the time you want to the date, like the time you want to retire, with what amount of money you want to retire with, right?
Yeah, you can think about those things and visualize them. We think about money because our money now is digital, and not many of us use cash, although for some things we kind of have to. If we're going to go to the bodega, we need some cash. But everything is very digitized. So in the past, where we could see how much money we have and how much money we earn because we're holding it, it's not like that anymore. And my point with that is saying that you should visualize what your future is. And you should visualize what your bank account looks like. If you only have $200 in your bank account, imagine filming a rap video sitting on the couch with $200. Not so cool, right? You want to bring that up. You want to visualize what your financial life looks like, and not only what it currently looks like, but what the future is going to look like. And sometimes that means visualizing just 2 years from now. We had a horrible year. So many people lost their jobs last year. The economy is shifting. The world is changing. A lot of people are just trying to get it together. And so you might just want to visualize, what does 2 years out look like?
Exactly. Yeah. Thank you for saying that.
Yeah, because it's
Yeah.
the reality. And also we go through peaks and valleys in life. You can go from having a 6-figure job to suddenly losing your job, which a lot of people did last year.
Yes.
So that's essentially what I would love for people to kind of keep in mind. Visualize what your future is going to look like 2 years from now, 5 years from now, 10 years from now. Draw it out. Maybe if you don't feel like you're an artist, maybe you could just type it out and list the things that you would like. And that doesn't necessarily mean I want to buy a car, I want to buy a house, I want to buy these things. That should kind of actually be at the bottom of the list. The first things that should be on the list is, I want to feel safe. I want to be comfortable.
Yeah.
I want
have
to
security. Yeah.
have the security that I deserve. We all deserve security. We should not be living life just to acquire things. We should be living life to enjoy it, and the only way that we can really enjoy that is by reducing stress, reducing anxiety. And in order to do those things, we really have to think about how we manage our money.
Yes, dropping so many gems today, Julie. Thank you so much. I really love on your IG how you made a post about your sister investing $1,000 last year and thinking of $2 million, right, as her goal. Can you break down a simple math on investing more a month and a higher reward on our contribution goals?
Absolutely. Oh my God, I love my sister so much. I have 2 sisters. One is 19 years old and the other one is 27 years old. Amelie, the younger one, is studying psychology here in Stony Brook. And my 27-year-old sister is actually a writer. She writes for Amazon. She's brilliant. And both of them have started investing after literally, after me forcing them to, in a sense. but I forced my little sister to start investing as soon as she started working, right? So she got her first job at the mall. That whole year, she made about $3,000 that year. And so when she made those $3,000, I said, put $1,000 into your investment account, Roth IRA specifically. She's using a Roth IRA. So she put $1,000 into the account against her will, essentially. She's like, I'd rather, go shopping. And I'm like, I know, I was in your place. I know what you mean. But trust me when I tell you, she put in $1,000. She started investing into, I believe, used VTI. This is an index fund. So there are a lot of index funds. She particularly used VTI. It's actually an ETF. So ETF is an exchange traded fund that functions just like an index fund because it covers the index, the market, those sectors that I was talking about. So she used VTI, put $1,000 in. She didn't set up a consistent plan against my advice. I said, okay, consistently put in $100, $200 a month, whatever the case may be. She didn't do that, but she went back and she put every so often and she put in more money, more money, more money. Now her account just hit, I think it's like $14,000.
Wow.
You went from having $1,000, starting with $1,000 last year, to now having $14,000 into the account. And just to break down, when it comes to IRAs, if you don't have one, a Roth IRA, just open one. Literally, just do it, especially if you're a woman, okay? And the reason I say that to women specifically is because with a Roth IRA, and you get a lot of little perks. I'm not going to go into them right now, but there are literally like 20 different perks that you can use a Roth IRA for. And one of them is if you need to pay for the birth of your child. If you're a woman and you have a reproductive system and you plan on using it, and sometimes, it comes unexpectedly for some people, but if you're a woman, you should have a Roth IRA because you can always use that money to take care of not only yourself, but your future child. So anyway, the Roth IRA, she started it. She's like super excited. Now she's all in. Now she gets it. Now she's like, oh yeah, I'm putting my money in. I set up automatic contributions. So
awesome.
It does take small wins for us to keep going. And I think that applies to everything in life.
Mm-hmm.
Yeah.
Even when you think about a career, even when you think about a relationship, when you have small wins, you dig into it a little bit further and you're like, okay, I like how it's going. Let me continue going. And so her goal, if she didn't invest a single penny with the $14,000 that she has now, she will have $406,000 in that account. Almost $500,000 in that account without putting an additional penny in that account. Why is that? Compounding interest means that your money is constantly and continuously working for you every single day. And not only the money that you put in is getting reinvested, but the money that money earned the day before is getting reinvested. That's compounding interest. And then her time frame. She's young. She's 19. She has, 40, 50 years to really start taking money out of those accounts. So that's kind of the beauty. If you think about it in that way, and if you visualize it like that, do the calculations, you can literally just look up retirement calculator or compounding interest calculator, and that can kind of force you or show you what would it look like if I put $50 a month? What would it look like if I put $500 a month? And then it incentivizes you.
Yeah, that's so cool. Good. Well, congratulations to your sister, because I didn't have anyone in that was older than me, like whether my brother or even my mom. My mom was a nurse. She was making a really good income, but she didn't tell me what to do with my money. I had to learn in my late 20s. So now I have a Roth IRA. It's compounding interest, but it's slow. So I definitely need to schedule a session with you in your workshops that we'll talk about later at the end of the podcast.
And I will say, just because you mentioned that it's slow, if you are questioning your current investment account, look at how it has done year to date. And if it is worse than what the S&P 500 is, so if you look up S&P 500 year to date, it's going to give you a percentage, and it's going to say that S&P 500 is up 12%. I think we're about 16% right now because the market keeps going up and up. So if your particular account is below what the current S&P 500 is at, there might be something wrong with your account. So it might mean that the money is not actually invested. It might mean that your account is invested into something that's very expensive. So all the money that you're earning is being taken away by the management of that portfolio and the expense of that investment. So that's what you kind of have to consider when you, if you perhaps are in that situation where you think it's not growing fast enough, you know, just take a look. Maybe you need to dig deeper. Maybe the money's not invested. Just by putting the money into the account, remember what I said about my sister. She opened up the account and then she picked an ETF, right? So she picked her investment. You can't just put the money in and expect that it's going to pick its own investments. And to close that out, I'll say that there are many, many stories of people that have deposited money into their investment accounts consistently their entire lives, 30, 40, 50 years, only to find out that the money was never invested. The money was just sitting there. And that's why it never grew. So you don't want to be in that situation. You want to make sure that you not only open the account, but you actually invest the money. But yeah, you and I, we can sit down, we could talk about it.
Yeah, thank you so much.
Yeah, that's great advice. Yeah, just to kind of look, because sometimes when things aren't popping, it's like there's a reason for it. It's like, what's going on with it? You just kind of do that extra work and extra digging. And like you said, really try to understand what things mean and what they're really about, so that we can get the most out of our investments.
Yeah. Julia, can you tell us like any hot money saving tips for any young millennials that could be struggling with finances right now, post-COVID pandemic? You know, anything that people can take away while they're, you know, listening to the podcast?
Hot money tips are always going to be invest in yourself, learn. If you are starting out and you don't know where you're going in life, that's totally okay, because I promise you, none of us did. What I'm doing now is not something that when I was a teenager, I said, yeah, that's what I want to do. But that's because life is beautiful and it takes you through a journey and things change. Invest in yourself. Make sure that you are becoming familiar with financial structures. You know, right now we have the banking structure, we have the stock market. It's been around for over 100 years. There's a lot of that's in place that you should participate in. Also, because you're young, because you have your full life ahead of you, explore new things. You should be exploring crypto. You should be exploring, okay, new business. You should be exploring what are innovative ways for not only to invest into things, but to create things. That's my advice for young people. I think that the world is truly your oyster. What it looks like now is not what it's going to look like in 10 years. It's not what it's going to look like in 20 years. So don't feel pressure to force yourself to make your life look like what everyone's life looks like right now.
Wonderful. Thank you for that. Yeah, that reality that everyone needs to hear about. Yes. Thank you so much. We learned so much from you today, and I would love to know what would you want your legacy to be with your personal brand with Investing Latina? What do you see? Where do you see yourself?
With Investing Latina, I really started it because I was sharing my own personal journey, because I started investing young, because I had all this credit card debt and I had to emotionally mature when it came to life and money. So I said, I want to share these things with people. All of a sudden, it grew into this beautiful, amazing things. I speak for huge corporations now. I have my program, the Investing Workshop, where I teach people how to get started, not only in English, but also in Espanol. And I love that. It's something that there have been many times where I thought about quitting. That's a whole nother topic and a whole nother episode. There are many times where I thought about quitting, and then I wake up the next day and I realize I love doing this. And that's why I keep going. I hope that my legacy could be that people in our community, and in the Latin community, in minority communities, in immigrant communities, underrepresented communities, all of the people that didn't have someone teach them about financial literacy, all the people that are struggling right now in this moment to get by in life, I hope that I can help some of those people. And I hope that I can show them that you can do it. There are going to be a lot of challenges, but you can start small and you can build security for yourself. And once you have security down pat, you can build financial freedom.
Wow. Thank you so much.
Love
I mean,
that.
you're doing it now, and you're
Yes.
you're affecting thousands and hundreds of people. So thank you so much for your work and the service in the community, and giving back and being of service to everyone. So thank you so
Yeah.
much.
Yeah, because everything that you do on Instagram is really a service to everyone. It's a free service. You give out a lot of tips, a lot of amazing resources. So it's really you're already doing that. We can't wait to see you continue and where your path leads you.
Yeah. And thank you guys so much. Please check out investinglatina.com/workshop. She has amazing workshops that she schedules all the time. So you can learn about different ways to invest and saving money. And yeah, if you know anyone that's struggling with money right now or don't know what to do with their money, go ahead and share this episode with them right this moment. On whatever platform you're using, use that tab, share button, DM them, email them this thing, text them. I'm sure they'll get some really good, juicy advice and info from this podcast. And if you want to stalk Julie, follow her at Investing Latina on Instagram.
Yes,
Yes.
thank you so much for having me. This was so much fun. For everybody listening, just keep going, keep learning. And I always tell people, keep investing. So you can definitely find me on socials as Investing Latina. I have a YouTube channel so you can like dig in, you know, when you go through that moment where where you feel like you're obsessed and you want to learn it all, you can dig into that channel. And again, thank you both for having me. This has been so fun.
Yeah,
Thanks,
thanks,
Julie.
babe. Thank you so much. Thanks for listening to the Conscious Kitchen podcast, and we'll see you guys the next one.
See
Take
you next
care.
time.